Hello and welcome to Pro Trader Strategies Market Commentary for Monday, November the 6th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. Having all that out of the way, let's get it on. Not a whole lot of economic data today. It is a Monday. We don't usually see a whole lot of economic data on Mondays. We do have a Fed governor speaking. Dudley is speaking today, probably right now actually, as a matter of fact. And other than that, for the rest of the week, we are pretty light on the economic data. We got Yellen speaking tomorrow, and then we have the crude oil inventories on Wednesday. But for the most part, it's a pretty quiet week here and across the pond. So one thing we do have going for us is a lot of earnings going on. So we'll talk about some of that mostly. And having said that, I'm keeping my margin free for those earnings trades that we are really starting to get in the thick of. So, but without further ado, let's get on to the overall markets. We've got crude oil moving higher by about $1.50 right now, $1.55. Just blasting off today earlier was pretty quiet, and then the market just really started accelerating to the upside, catching the shorts. I thought we were going to see at least a little bit of a pullback again, maybe down to this 52 area, and then make this move higher. We are blasting off right now to the point where I'm going to have to redo my Fibonacci levels here. So I'm not going to do that right now, but I'll do that probably later on today when we start after the day is over. Gold futures moving higher. Pretty much everybody's happy across the board. We've got crude oil higher, gold higher, except for me, of course, because we've got crude oil or gold moving higher, despite the fact that the equities are moving higher. And I have a bearish trade on for gold. I have on a put calendar in there. So I'm looking for this little bit of move higher, which is good, but I don't want it to continue because I want those front month puts to decay worthless and then have that downside move. So in a sense, it's not too bad right now. I'm getting that kind of move that I looked for and talked about in these in the webinar for the put calendar. I just need to see a little bit of a rollover. I don't absolutely want that to happen right away, but down the road, I definitely want to see that rolling over. And bonds moving higher by about 18 ticks. I've talked about this. Fed governors are talking about inflation and the economy starting to pick up. That's going to lead to increased interest rates, which should cause the bonds to go down. They're bucking that theory right now as the bonds continue to move higher by 18 ticks, but they can't have a whole lot of move to the upside unless something dramatic happens to change that, and I don't really see that anytime soon. Some kind of black swan, if you will. And then today we've got VIX moving higher, despite the fact that equities are moving higher. The VIX just got slammed on Friday with the Dow getting all-time historical high settlement and things of that nature. The VIX really got slammed today, coming back just a little bit, but still in single digits. Dow Jones, here we go. We got it up about 24 points, 480-ish, if you will, but again, having a new intraday all-time high with the Dow Jones Industrial Average. NASDAQ, it's going to be a broken record, yes, new all-time intraday highs in the NASDAQ, up almost 20 points right now, well into that 6,000. Now we're 6,300 plus. Not looking like we're going to get my pullback, and as a matter of fact, I'm pulling away from that theory of having that pullback really anytime soon with the economic data coming out. One thing we did get was factory orders out of, I believe it was Germany. Factory orders came in at 1%, higher than the expected negative 1%, so much better than expected there. And they revised last month's number up to 4.1%, expected to be 3.6%. So Factory orders is nice because it's a leading indicator that they're getting these orders and they're going to have to produce, which means they probably are going to have to hire on people, purchase different types of materials to go into that, and all those things would cause the economy to start moving better. So that was one of them. It's not a really widely looked at number, but it is a good one to look at because it is a leading indicator nonetheless. And then we have the E-mini S&Ps up almost 6 points. Again, new all-time high intraday here. As you can see, we're just printing that new all-time high almost as we speak here, almost unabated to the upside as overnight inventory was looking pretty short, and coming into our market, they just had to bail out and continue higher. The market really started turning around on those German factory orders, so that is pushing us higher. On to things that I'm going to be looking at. Priceline. I'm going to be playing Priceline to the upside. It's got a nice dividend. They have a tendency to beat on the street. I'm going to play this to the upside. It's got really high implied volatility percent. So hopefully I'll be able to get way down here to get into that trade. I think that Priceline is going to be doing better as this economy starts picking up. We're going to start seeing more people going on vacations and spending. We've seen personal spending go up. Some of that could be attributed to travel as well. All right, but Priceline is down on the day, but I'm going to still be playing this most likely to the upside in both my IRA and in my margin account. Hopefully in my IRA. We'll have to see what I can get out of that. This is a pretty hefty trade that I don't know if I'm going to have enough margin in my IRA for that. One thing I'm also looking to get out of right now is 3M, ticker symbol MMM, and I'm trying to get out for right around 50% of my max profit on this trade. Excuse me. It is relatively close. I put it in a 20-cent bid. 22 cents is about 50% of my max profit. It's trading right around 26, 27 cents. I was hoping to get a little bit of a move higher here, but today's down move is not allowing me to get to that 50% of the max profit like I'd like to see. But I have a working order in on that right now, just in case we see something happen and I can get that extra nickel to come out. Another one that I was looking at for that trade we talked about on Friday in the webinar was Apple. And with Apple, I was looking to put on a call Christmas tree in there because I was expecting it to move a little bit higher. Apple doing pretty well with their sales. It still had pretty decent implied volatility. Another thing with that Christmas tree is it could be considered a 1x3x2 or a twist to the butterfly. It is in the butterfly family. And I'm trying to get it right around a quarter the width of the spread. So I'm looking at the December and looking to buy the 170 calls, selling 3 of the 180 calls, and then buying 2 of the 185 calls, which is that 1x3x2. And I'm doing a ratio of that a little bit larger than the 1x3x2, but still in proportion. The market's moved higher, is up closer to that 175 handle, which is, when I was looking at this on Friday in the in the webinar explaining this, it was really set up nicely. It's gotten away from me. I put it in even higher than we talked about in that webinar to get in for right there around the quarter, the width of the between 170 and the 180, which is my rule for that, right? And I was looking to get in there at around $2.50. It's trading around $2.60 right now because this market continues to move higher. So I'm going to be looking for a couple other opportunities in there, but if it moves much higher, maybe even closer to that 175, I might move all of those strikes up by 5 ticks, all right? But I haven't added it in yet. It's debit spread, so it's not going to take a whole lot of margin. I'd still be able to play some of these other earnings trades, which is what I want to save some of that margin for. So kind of hit or miss on whether I'm going to be moving those up or not. I'm definitely not going to chase this trade up above and break my rules on this trade, but just wanted to keep you guys up to date on that, especially you guys that watch that webinar on the call Christmas tree, just to let you know where I'm at, where that stands. Had I gotten right on it as soon as the market opened, I probably could have gotten it for pretty close to 50% of 25% the width of those strikes, but I thought I could get it better and ended up chasing it right to that rule. All right, and now it's gotten away from me. That's about it. Friday's webinar is going to be on the put Christmas tree, which is another 1x3x2. It's a butterfly family, like I mentioned. I'm going to go through all those rules, how to set that up. It's a great one, especially when we don't have a lot of volatility in the market. You can do this with vol or without. So it's one of those middle of the road ones. Usually with selling premium, I say go above 50, and when you're buying premium, you got to be well below 50 to set that up. But this one, the way that the nature of the beast, if you will, you can set it up in just about any type of implied volatility market and get away with it, as long as we expect that volatility to come out, which would have worked out quite nicely had I just put this trade on Friday before the webinar. But, you know, hindsight's 2020, and we just have to do what we have to do, and that's about it. Other than check out protraderstrategies.com, and if you can't take that, take it easy. I got to work on my aim.